What if I told you that the biggest move in silver is already happening right now, and most investors still cannot see it? While the world watches stocks, artificial intelligence companies, and the daily headlines coming out of Wall Street, something much bigger may be developing quietly behind the scenes. Veteran market analyst David Hunter believes the financial system is approaching a major turning point, and according to him, silver could become one of the biggest winners of the next market cycle. The scary part is that by the time the average investor realizes what is happening, the opportunity may already be gone. Welcome back to Pulse of Silver, the channel where we uncover the hidden truth behind the silver market, global finance, and the economic events shaping our future. If you enjoy honest silver analysis and market insights, make sure you stay with us until the end, because today's story could completely change how you look at silver investing. For years, silver has remained one of the most ignored assets in the financial world. While gold usually receives attention during times of economic uncertainty, silver often stays in the background. Many investors see it only as an industrial metal used in electronics or solar panels. Others believe it simply follows gold without having its own story. But according to David Hunter, this way of thinking may be dangerously outdated. He believes silver is sitting at the center of a massive economic shift that very few people fully understand. Hunter has warned for some time that the global economy may be heading toward what he calls an everything bubble. In simple words, he believes stocks, real estate, and many financial assets have become too expensive because of years of easy money policies, low interest rates, and endless government spending. Central banks printed trillions of dollars over the last decade, especially after the global shutdowns and economic panic of recent years. That flood of money pushed asset prices higher and created an environment where many investors became comfortable taking huge risks. But history shows that bubbles do not last forever. Eventually, debt becomes too large, inflation becomes too painful, and confidence begins to break. Hunter believes the world may now be entering the final stage of this cycle. According to his view, markets could first experience one final powerful rally before facing a severe financial downturn. And during that chaos, investors may rush toward hard assets like gold and silver as safe stores of value. This is where silver becomes extremely important. Unlike many paper investments, silver is a real physical asset with limited supply. At the same time, industrial demand for silver continues growing rapidly. Silver is needed in electric vehicles, solar energy systems, medical technology, and advanced electronics. Every year, industries consume enormous amounts of silver, yet mining production struggles to keep up. This creates a very unusual situation where investment demand and industrial demand may collide at the same time. Most investors are still asleep to this possibility because they continue focusing only on short-term price movements. When silver moves slowly, people lose patience. They chase technology stocks or trendy investments instead. But historically, silver often stays quiet for long periods before exploding upward very quickly. When momentum finally arrives, the move can shock almost everyone. David Hunter believes the current environment may be setting up exactly that kind of moment. Rising debt, unstable banking systems, inflation fears, and global economic uncertainty are all creating pressure inside the financial system. At first glance, many people think these issues only affect stocks or currencies. But underneath the surface, they may actually be laying the foundation for a major silver breakout that few are prepared for. And this is exactly why today's discussion matters. Because by the time silver becomes the main headline across financial media, the easy opportunity may already be over. The smart money often moves before the crowd notices anything at all. One of the biggest reasons most investors are missing what is happening in silver is because they are looking at the wrong signals. Many people believe silver only rises during economic collapse or panic. But David Hunter argues that the setup for silver is far more complicated and far more powerful than most realize. According to him, silver may benefit not only from fear but also from the final stages of economic excess before the system begins to crack. Right now, the global economy is trapped in a difficult position. Governments continue carrying massive debt burdens. Central banks are trying to control inflation without crashing the economy. Consumers are struggling with rising costs, while businesses face uncertainty about growth. At the same time, geopolitical tensions continue increasing around the world. These pressures are slowly damaging confidence in the traditional financial system. Historically, when confidence weakens, investors begin searching for assets they believe can survive economic instability. Gold has always played that role, but silver offers something unique because it is both a monetary metal and an industrial resource. This combination gives silver the potential for explosive moves during periods of financial transition. David Hunter believes many investors underestimate how small the silver market actually is compared to other major financial markets. Trillions of dollars move through stock markets every single day, while the silver market remains relatively tiny. This means even a small shift in investment demand could send silver prices dramatically higher. If large institutional investors begin moving capital into silver, the supply available on the market could tighten very quickly. At the same time, physical silver inventories have become an important issue. Over the past several years, many analysts have pointed to growing pressure on physical silver supplies. Industrial demand continues rising because governments and corporations around the world are investing heavily in green energy projects. Solar panels alone require large amounts of silver, and as countries push for more renewable energy, that demand may continue growing for years. Meanwhile, mining companies face major challenges. Discovering new silver deposits takes time, money, and government approval. Production costs are increasing, and some mines are producing less than expected. This creates a dangerous imbalance between supply and demand that many investors are barely paying attention to. Hunter also believes central bank policies may unintentionally push precious metals higher. If economic conditions weaken significantly, central banks could eventually return to money printing and lower interest rates in an attempt to support the economy again. While these policies may temporarily stabilize markets, they also reduce confidence in fiat currencies over time. When people believe governments are creating too much money, they often turn toward hard assets like silver and gold to protect purchasing power. What makes silver especially interesting is that it tends to move more aggressively than gold during major bull markets. Gold is usually considered the safer and more stable precious metal. Silver, however, often behaves with greater volatility. That volatility scares many investors away during quiet periods, but during strong bull runs, it can lead to massive percentage gains in a short period of time. Most investors today remain focused on daily news cycles, short-term stock market moves, and social media trends. Very few are thinking seriously about long-term monetary risk or physical asset shortages. According to David Hunter, that lack of attention may become one of the biggest mistakes investors make during this decade. Because when financial sentiment finally changes, silver may not slowly climb higher. It could move rapidly and violently, leaving many people wondering how they missed the signs that were sitting directly in front of them all along. Another reason investors may be underestimating silver is because they still believe the financial system is stronger than it really is. On the surface, markets often appear healthy. Stock indexes reach record highs, unemployment numbers may look stable, and governments continue telling the public that inflation is under control. But David Hunter believes these appearances may hide serious structural problems underneath. One of the biggest concerns is debt. The modern global economy runs on borrowing. Governments borrow money, corporations borrow money, and consumers borrow money. For years, low interest rates made this system appear manageable. But once rates rise, debt becomes much more expensive to maintain. Suddenly, businesses struggle with financing costs, governments face larger interest payments, and consumers begin cutting back on spending. Hunter warns that many financial markets today are heavily dependent on central bank support. Investors have become used to rescue programs, stimulus packages, and emergency liquidity whenever problems appear. But this dependence creates long-term instability because markets stop functioning naturally. Instead of reflecting real economic strength, prices become driven by policy decisions and printed money. This matters deeply for silver because precious metals often react strongly when trust in financial systems begins weakening. If investors start questioning whether governments and central banks can truly control the situation, many may move toward tangible assets that cannot simply be printed into existence. Silver also has a psychological advantage that many people ignore. Compared to gold, silver feels more accessible to average investors. A single ounce of gold can be very expensive, while silver remains affordable for millions of people around the world. During times of financial fear, this accessibility can attract huge waves of retail buying. Even small investors can participate in silver markets, and if enough people rush toward physical silver at once, available supply could disappear rapidly. We have already seen small examples of this in recent years. During periods of economic uncertainty, dealers sometimes struggled to keep silver products in stock. Premiums on coins and bars increased sharply as demand surged. While these moments were temporary, they demonstrated how quickly physical silver markets can tighten when investor interest suddenly rises. David Hunter believes the next major financial event could create an even larger reaction. If stock markets experience a major downturn while inflation remains stubborn, investors may face a difficult reality. Traditional portfolios built around stocks and bonds may no longer provide the protection people expect. In that environment, precious metals could regain importance in ways many younger investors have never experienced before. There is also the issue of currency confidence. Around the world, countries are exploring alternatives to the US dollar for trade and reserves. While the dollar remains dominant today, growing geopolitical tensions and rising debt levels are causing some nations to diversify their financial strategies. Precious metals often benefit during periods when trust in paper currencies weakens. Silver's role in technology adds another powerful layer to the story. Unlike some safe haven assets that depend only on investor fear, silver has real industrial demand supporting it. Modern economies rely heavily on silver for advanced manufacturing, renewable energy, and electronics. This means silver may continue seeing strong demand even during changing economic conditions. Most investors still think of silver as an old-fashioned metal sitting quietly in vaults. But in reality, silver sits at the center of both financial protection and industrial growth. According to Hunter's outlook, that combination could become extremely powerful in the years ahead. And if he is right, today's silver prices may eventually look incredibly cheap compared to what could happen once the broader market finally wakes up to these risks. David Hunter's outlook becomes even more interesting when we consider how market psychology works. Financial markets are driven not only by facts and numbers but also by emotion. Fear, greed, confidence, and panic often move prices far more aggressively than economic reports alone. And according to Hunter, the emotional cycle surrounding silver may still be in its early stages. Right now, many investors remain skeptical about precious metals. Some believe technology and digital assets have replaced gold and silver as modern stores of value. Others assume central banks will always prevent major financial disasters from happening. This confidence keeps money flowing into traditional markets while silver continues receiving limited mainstream attention. But history shows that investor psychology can change very quickly. During periods of market stress, people often abandon risky assets and search for safety almost overnight. Assets that were ignored for years suddenly become extremely popular. This shift can create explosive price moves because demand arrives faster than supply can respond. Silver has experienced this kind of behavior before. In previous bull markets, silver prices moved dramatically higher within short periods of time. Investors who entered early often saw enormous gains, while those who waited for mainstream confirmation usually arrived after much of the move had already happened. Hunter believes the current setup may be creating a similar environment. Economic pressures continue building globally, and many financial assets remain highly priced relative to historical standards. If confidence in stocks begins breaking while inflation concerns continue rising, silver could benefit from both fear and opportunity at the same time. What makes silver particularly dangerous for short sellers is its relatively small market size. When strong buying pressure enters a small market, price moves can become extreme very quickly. If investment funds, institutions, and retail investors all begin competing for physical silver simultaneously, available supply could tighten rapidly. Some analysts also point toward the growing disconnect between paper silver markets and physical silver demand. Large amounts of silver trading happen through futures contracts and financial products rather than direct physical ownership. Critics argue that these paper systems may suppress true price discovery because far more silver is traded on paper than physically exists in available inventories. If enough investors begin demanding physical delivery instead of paper exposure, pressure on the market could intensify significantly. This possibility has become a major discussion point among many silver supporters who believe current prices do not reflect true supply and demand conditions. David Hunter's broader concern is that the financial system itself may eventually force investors toward hard assets. If governments respond to economic weakness with more debt creation and currency expansion, confidence in paper money could continue eroding over time. In that environment, silver may become attractive not only as an investment but also as a form of financial insurance. This does not mean silver moves in a straight line upward. Silver remains volatile, and sharp price swings are normal. Investors often become frustrated during corrections because silver can fall quickly even during long-term bull markets. But historically, major silver rallies have often surprised both supporters and critics with their speed and intensity. Most investors today are still waiting for obvious confirmation before taking silver seriously. They want headlines, expert approval, and strong price momentum before feeling comfortable. But by then, much of the opportunity may already be gone. According to Hunter's view, the smartest investors are usually those who recognize changing conditions before the crowd does. They position themselves early while assets remain unpopular and undervalued. And right now, silver may still be sitting in exactly that kind of position. As we bring this discussion to a close, one message stands out clearly from David Hunter's warning. Most investors may still be completely unprepared for what could happen next in silver. While the financial world remains distracted by stock market rallies, political headlines, and short-term economic data, deeper forces may already be reshaping the future of money and investing. Silver is no longer just a forgotten precious metal sitting quietly beside gold. It has become a critical industrial resource, a potential inflation hedge, and for many investors, a form of protection against growing uncertainty in the global financial system. Rising debt, central bank policies, currency concerns, supply shortages, and increasing industrial demand are all creating conditions that could eventually push silver into the spotlight in a very powerful way. David Hunter believes the current financial system may be approaching a major turning point. If markets experience the kind of stress he expects, investor behavior could change rapidly. And because the silver market is relatively small, even moderate increases in demand could create dramatic price movements. This is why many long-term silver investors continue watching the market so closely despite years of frustration and slow price action. The truth is that major financial opportunities rarely appear obvious in the beginning. When an asset is ignored, unpopular, or misunderstood, most people avoid it. Only later, after prices rise and headlines spread everywhere, does the crowd suddenly become interested. By that stage, the biggest gains are often already behind us. That does not guarantee silver will immediately skyrocket tomorrow or next week. Markets are unpredictable, and timing is always difficult. Silver can remain volatile and frustrating for long periods. But what makes this moment so important is that multiple economic forces now appear to be moving in the same direction at once. That combination is exactly what many experienced analysts look for before major market shifts occur. For investors willing to study history, watch global trends, and think long-term, silver may represent more than just another trade. It may become one of the most important financial stories of this decade. And if David Hunter's warnings prove correct, many people may eventually look back and realize the signs were visible all along. Thank you for watching Pulse of Silver. If you enjoyed this deep dive into the silver market and want more updates on precious metals, economic trends, and expert analysis, make sure to subscribe and stay connected with the channel. The world of silver is changing quickly, and we will continue bringing you the latest insights as these events unfold. Before we end, remember that this video is for educational and informational purposes only. Nothing discussed here should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. Markets can be risky, and silver prices can move up or down very quickly. Always do your own research, consider your financial situation carefully, and speak with a qualified financial advisor before making any investment decisions.